This week, we're going to continue our topic on the real estate market here in Ontario and Canada. And we're going to look at some of the numbers in terms of what we saw in April sales, in terms of number of homes, and obviously price as well. That's very important if you're looking from a buyer seller perspective, as the market has changed, as I've been sharing with you in the past. And obviously, what's going on with the Bank of Canada, as they've been making news this week as well. In addition, we're going to look at the little bit of the stock market you probably heard in the news of what's been going on. And this is very macroeconomic, obviously, with the war in Ukraine and Russia continuing. So there's a lot of news, lots happening in the market. So definitely stick around, throughout. Leave any comments, likes, always appreciate it. And again, I am a wealth management advisor. I research, I do this day in, day out, and I'm really invested in the market. So I definitely, this is a little bit about my perspective, obviously perspective from here at the Arthurs. So definitely go to someone that's, a trusted advisor, who you trust, or you have a relationship, or, you believe in, and their expertise. Or any questions for me, always leave it in the comments. So when we kick it off here with the sales numbers. So this is from John Palace. He's a real estate, I'm gonna call him guru because he definitely has his own firm. He definitely, a lot of different articles and information, and someone I follow very closely on Twitter. As you probably heard, Elon purchased Twitter as well, so that tells you a little bit about Twitter. So for those of you looking for early look at what the April sales numbers are going to look like, I'm going to blow this up. So we're seeing numbers down all across the board. April versus March in terms of number of homes being sold. So look at that percentage change in low-rise home sales first 3 weeks of the month, April versus March 2022. The largest decrease here we're seeing in Pickering at minus 46%, Richmond Hill at minus 43, Vaughan minus 26, we got Aurora minus 44, Brampton minus 15, look at Milton, Mississauga minus 26 and minus 22 respectively. So sales are down. We know buyers are fatigued, want to take a break. Bank of Canada is making a lot of noise, a lot of microeconomic inflation. So a lot of different topics. So why don't we kick over to the next topic here, what I really want to focus on, which is what the Bank of Canada said this week. This is an article here by Reuters, Bank of Canada to consider another half percentage base point increase. This is already on top of what they increased in April here in 2022. The Bank of Canada will consider another half percentage point rate increase in its next policy decision as too high inflation potentially nears its peak. This is from Governor Tim McMahon on a Monday. Even though he did not rule out even a larger move, some have been saying 75 basis points, but that's very aggressive. It seems like 50 basis points is a given at this point. The Canadian Central Bank made the rare move of raising its key policy rate by 50 basis points earlier this month, as I mentioned in April, lifting it to 1% from 0.5%. Its next policy decision is June 1st, so about a month away as we're entering. I'm recording this on April 30th as we enter the month of March. Month of May, I should say. I expect we'll be considering a 50 basis point increase. I'm not going to rule out, other options, but anything bigger than 50 basis points is very unusual. This is from the TIF here, McElham said. And this is him testifying in front of the House of Commons Finance Committee. The central bank has not hiked rates by more than 50 basis points since 1998. Take that in, how long it's been since they had to take such action, where inflation is, and how hawkish, how focused they are on increasing interest rates here to tame inflation, as that is one of their key objectives, which is to control inflation, usually between 2 and 3%. Late last week, Malcolm told reporters he would not consider out or will not rule out increasing interest rates by more than 50 basis points in one go to tackle inflation, which is now at a 31-year high. McElham also reiterated that inflation is too high and looks set to stay higher for longer than previously thought. He repeated that the central bank will act forcefully as needed to slow the rise in prices. When asked if March's 6.7 inflation was the peak, McElham said it could be near, as there's talk about peak inflation. Have we reached that point where prices stabilize or go lower? There's still quite a lot of volatility in inflation. So look, it could go a little higher. It could be the peak. I do think we are close to the peak, he said. What I want to underline is that whether this is the peak or not, 6.7% is too high. This is one of their objectives. They're going to go in strong. So that's definitely on the playbook here coming on June 1st, and what that means for the market, the real estate market. Because I've said before many times, there's an inverse relationship. Interest rates go up, house prices technically should go down, as we've seen the reverse in the last 2 years since the pandemic. So going to continue here our topic of prices. This is again from John Palace, as I was showing in the first Twitter thread. He's continuing, as I definitely asked, and a few have asked for price data. Prices peaked in February, so these numbers compare the average sale price during the first 3 weeks of April versus the first 3 weeks of Feb for low-rise homes. This is low-rise homes. Take that into account. While we typically compare average prices year over year, in a slowing market, that approach can be misleading. So right now we're taking the data as very narrow. We're going to compare April here to February 2022, which is, the peak in most people's opinion. So here we're seeing the price decreases. So you can see all negatives across the board. Our largest here, we can see here, we got 21% in Stouffville, Whitby at -15, same thing with Pickering. We got -10% in Milton, -15% in Milton, sorry, 10% in Mississauga, Markham at -8, and Brampton at -9. So clearly, it seems like Feb 2022 was the peak, and prices have come down, as you can clearly see here on the screen. So, think about that, what it means in terms of the Bank of Canada raising rates more. It's going to continue to influence the real estate markets. Those things are definitely going to be changing, and they'll be continuing to change. And this is very evident, as you can see, in the stock market. The stock market always reacts before because it's always looking forward into the future. As you can see here, and this is from April 29th, what happened in terms of the NASDAQ closing the month. The U.S. stocks cater as the Dow sheds 939 points, and NASDAQ notches its worst month since 2008. And if you recall, in 2008, it was we're just starting the recession. That was the financial crisis of 2008, bleeding into 2009. So that's the worst month it's had in that long. So, definitely, Federal Reserve, Bank of Canada is definitely going very aggressive in terms of raising rates, and that's having influences in the real estate, stock market, across the board as asset prices readjust or get revalued, because it makes a difference when interest rates go up. So I hope you appreciate me coming at you here on a weekly basis. Sorry I wasn't here last week as I was on vacation, and I've been a bit under the weather recently. So I love to hear any of your comments. Subscribe, a like, tell me what you think. You have any questions for me, always leave it in the bottom if you want to hear my perspective or just want to have a conversation. So have a great rest of your week, have a great weekend, and we'll talk to you soon. Thank you.